So I just wanted to make a video to make some sense of what's happening in the market right now. And right now I have the IWM pulled up right here. This is the bar chart here. And then the lines are the Dow is right here. And then the blue is the SPY. And the orange is the QQQ. And these are the percentages basically from if we go back in time here a little bit, from the previous all-time high in November of 2021. So using these percentages, we can see which ones are outperforming and we can see which one is underperforming, and the one that's underperforming is the IWM. It's still down 4% from that November 2021 time period. And making sense of this chart, we can really understand why the QQQ took the biggest hit today. Essentially, it has risen the most since that time period, right? It's up 20% from that time period, even after today's sell-off, right? So that means it was up way more than that before, up about 28% before, just a little bit above. And then next we have the SPY, which is up 17% after today's sell-off. And then the Dow is up 11% after today's sell-off as well. So we can see that the ones that moved the most fell the most, right? And just because it's a little bit overextended, right? And on the IWM, we can see that it's still not even back to the 0% level. And even after today's sell-off, the weekly candle is still green, right? It's still a little doji candle. It's still green with the possibility to still close the week out green, right? So we can see the underperformers did not suffer as badly as the outperformers, but everything still took a little bit of a hit today. So where does that lead us for the future? What's going to happen for the rest of the week and so on? So let's just dive into each individual chart to see what lies ahead. So the first chart I have here is the IWM, and we can see a clear rejection off of a Fibonacci extension level and of my Gann arc. So this Fibonacci extension level is from the 2008 high and the 2009 crash, right? That's the extension level for this 3.618, and it does sit around $221. And you can see last week it wicked above, and this week it did as well. So it's a clear resistance zone. And I was pointing this out before on X, and sure enough, it still is a clear resistance zone. And then when you combine that with the arc, where it was a resistance here in the past in 2021, which now it still is here, a resistance zone in July of 2024. So the combination of these two indicated that it's a short-term top, and maybe price will not push through until maybe a little bit of consolidation. So let's see some indicators on here. The Ichimoku, we can see that the conversion line right here does sit around 212.02. So if things do continue to sell off and backtest to support, that would be the first level to test. And if that doesn't hold, it could go down to the baseline around 208, right? So we know the downside is pretty limited for the IWM simply because it's not very extended. So worst case, it could come back down here, and I don't think it needs to come back down to this blue level simply because this blue level and this 45-degree angle, this green right here, held as support perfectly for a long time, right? It was going up and down, and it's been a support zone for a long time, ever since it broke above right here in December of 2023. So I don't really see it necessary to come all the way back down to the 200 level, but it could be possible to come back down to the 208 level. So the downside risk here, possibly from today's price action, could be maybe about 4% more, right? So that's not too bad in comparison to the others. So now let's go check out the QQQ. So here at the QQQ, I have the Ichimoku pulled up, and we can see that it's almost near its baseline after today's 2.5% sell-off, right? it is possible, well, not 2.5. This week so far is 2.5. I believe it was a lot more. It's like 3% or something. But if we go back down to the baseline, that's only about a percent below. But price could come back down and retest this arc right here, which would be maybe about a 5%. So it's a little bit more than the IWM. The IWM is maybe like 4%. This is just a little bit more. So we could see some more downside to backtest this arc before price continues higher and higher to the next level, which I believe still will be $530 in the future, right? So where will it stop? We don't know, but we do know the support zone does sit around here, right? From about 458 down to maybe about 440, possibly maybe wick through to the 439 or so, right? And if we even add on some SMAs, we can see that they're still way down here. So I don't believe this will be a factor in price. I believe enough time will pass before price or before these SMAs catch up to price, right? So I don't think we need to worry about a giant candle to come down here because that's not very logical. I think what is more logical is maybe holding this or possibly going below to test this arc and then waiting more and more time for this moving average to catch up to price. And even if we add on the 8 EMA and the 21 EMA, we can see that also sits almost exactly at that baseline as well. So that's another possibility that this level could hold and we could be seeing possibly a rebound soon, but we just need to focus on that 458 down to 456 level for the QQQ. And the next is the S&P 500. So I'm going to just look at all of these indicators put on here and see how far price could go before we rebound. So this one did not break the conversion line that much already, right? So this one has even more room to fall because it didn't fall as much as the others yet. So if we go from the closing price down to maybe the baseline down here, that is 3%, right? So it has less to fall to get to the baseline, but there's bigger gaps down for these previous lows here, and that's about an 8% gap, right? And all the way down to the 50 would be like a 9% gap. But again, I don't think this will come down to this level right away because it's not very logical. The logical thing would be to come down to these levels first and then consolidate more and let time pass for these averages to catch up to price. So I do believe we're almost at a support here. And if we add on the confluence of the GAN, and here's my GAN, and I created this GAN on the monthly chart here. So we can see clearly that this was a resistance zone and clearly it was overextended, and we understand that this is a place that you want to be cautious. And sure enough, so far this is a big wick up top, and we could probably see a continuation for the rest of the month, maybe down to retest these levels into those 5200 levels that we saw, right? That down 3%, down 4%. If we put on the percentage there again, right, we can see maybe something around right there, around 5200 or so, right? That could be a possibility to consolidate where these candles form to form possibly a new base and allow the rest of those weekly moving averages to catch up to price. And we can see if we even put on the monthly Ichimoku, how really extended it is, right? The conversion line does sit around 49.33, but since these are monthly candles, I don't expect it to go down there right away. I expect months to go by and let these lines, these indicators catch up to the price, right? So in the end, I think what we're seeing is just a temporary top for the S&P 500. And I think retesting this zone where the top of these candles sit would be a very necessary step. And that could be anywhere from maybe 5,300 all the way down to possibly 5,200 or a little bit below, right? So we could be in for some more pain for the S&P 500, but it is matching up with all the other indices so far, the IWM, the QQQ, and whatnot. So I don't think things will get too terrible just yet because there still is some support. And lastly, we have the Dow Jones, which is actually very similar to the S&P, where this is a monthly candle. This is a monthly chart. I created this again on the monthly chart, and it wicked really above the arc, but it could not maintain, and it looks like it might close the month, which there's still 6 days, 7 days left in the month. It might close the month below this arc, which could lead to more selling pressure for a consolidation higher, right? But on the monthly chart, the the level for the conversion line is 37,193. And once again, I don't think price will just immediately go down there, as if we put on the weekly indicators, we can see that it still has support where it's at, right? The conversion line sits at 39,688 and the baseline sits at 39,493. And if we just put on our percentage, that's really not much, right? Down here, that's only about less than a percent. Less than a percent to go just to get to those levels. And we can see the baseline has been support for a long time. And the last time it broke the baseline, it did go back down to touch the cloud. So if it loses the baseline this time, is it going to go down to touch the cloud? Let's see. Possibly. Let's go to the indicator of the SMAs. We do have the 50-week moving average right there to stop it before it gets there, and that would be around 50 or 37 to 53. So essentially, this level is important. Otherwise, if that level breaks over time, it could get down to maybe a -6% or so to catch that. But again, I don't see this going directly down just because there is some support before there. So I believe that we'll see some consolidation before a move higher, right? So the bottom line is all of these indices, they hit some sort of resistance level within the last couple of weeks. And it's only common sense now for them to maybe cool off a little bit. But the good news is, and especially for the Dow or the IWM, it looks like they could be near a support very soon. So do I expect a lot more pain, a lot more bloodshed? Maybe a little, but not a lot. I think things are pretty normal, right? Just the sell off today just appears worse than it was just because some things were more overextended than others. So essentially, they're all still holding weekly levels, right? They're all still holding support. So possibly just a little bit more pain before we see prices consolidate and rise again.